you for your support to KLBF Pharma. So first of all, my name is Sharon Amanda. I'm the investor relation of the company, and I'm excited to see some familiar faces to us and also some new faces coming join us today. So it's been a while since our analyst gathering in the last February this year. So it's like 6 months, and we're excited also to have a presentation about KLBF Pharma, what are the updates for the business, and the presentation will be presented by Ibu Ira and also Ibu Kartika. So for those of you who are also joining us via Zoom, we also extend a warm welcome and hope you feel just as much a part of this gathering as those with us at the restaurant. So to kick off our event, let me introduce our Board of Directors of KLBF Pharma, starting from Ibu Irawati Setiadi as our President Director. Yeah, and Ibu Ira also will elaborate more with the key initiatives and key updates of the first half 2024 earnings result. And also we have Ibu Kartika Setiabudi as the Director here. And also Bapak Si Johan and Bapak Mulyali. Also Bapak Patrick. And after this event, ladies and gentlemen, you can also find our materials that will be uploaded to our website, www.klb.co.id. And just from a housekeeping standpoint, that today's comment may include forward-looking statements, which are subject to certain risks, uncertainty, and other factors. And I hope that this session will be informative to you. And without all coming once again, I'll hand it over to Ibu Irawati Setiawati for the presentation.
Okay. Yes, good morning, everybody. Okay, you're all on this side. Yeah. Welcome to the analyst gathering. Today is a very nice day in a new place for me at least. Yeah. It used to be in Fairmont or Senayan. Okay, so without further ado, I would like to give an introduction for today's presentation, and we will take a few minutes to see what we have done in the first half. So just to remind you, a brief look at the at the 2024 key strategic initiative. Oh, here. All right. So basically, just to remind ourselves that during this tumultuous times in the global macroeconomics and also, of course, in Indonesia, we try to, at KLB, post-pandemic in 2024, because 2023 we were still transitioning from the pandemic, which fortunately it declined very fast. Yeah, but we have to adjust our situation in terms, like, for example, our days of inventories, to accommodate this new normal. So going into the key strategies going into the 2024, at that time we decided to look at or to focus into our prescription SBU, prescription pharmaceutical, and of course the medical device. This is in line with the initiative coming from the government, from Pa Budi, that we would like to be independent and resilient, more resilient towards healthcare. Yeah. So anticipating that we don't want to have another pandemic, but according to the experts, we cannot avoid that. Yeah. So learning from the experience in the COVID, so we have to prepare from now on to be resilient. And that's what we are taking advantage in the prescription and the medical device and those be used. Yeah. The other, besides those two, yeah, international market, we would like to grow, to focus to selected countries, because we also see and we notice that also from those countries that we are in for the past, in ASEAN and also in Africa and Sri Lanka, there have been also post-pandemic situation in those markets, and we feel that's why you will see that in our export market, it's slowly picking up also. So we notice that the pickup from the post-pandemic is happening 23 and still in the first half of 2024. And for the others, and the others meaning consumer health and nutritionals and distribution logistic, we are trying to also adjust to the new behavior from the consumers now that they are more, conscious or aware to their health. They are learning from the pandemic, but also they are maybe in the euphoria stage, having been hooked up in for 3 years, since 2022. So we see that they are spending, a change in behavior. They are spending less towards vitamins and supplement, and more towards going out, and leisure, travel and leisure, So that's the change in the behavior from the consumers, and also in distribution logistics. I think it's a good sign that there are new potential principles and that we are adding, and you will see later on that more of new principles we are carrying more products from the new principles. And I think also you will see in our update, key takeaways from the first semesters. You can see the numbers there, and we see that. So let me say it again, that from our existing brands, you can see that the unbranded generics in the pharmaceutical division, the unbranded generics, that's the BPGS, the BPGS products are doing well, and also in the specialty category, therapeutical class, which includes the oncology. Unfortunately, that is picking up. Unfortunately for the patients, that is picking up cancers, incidence of cancer, and we can see from our portfolio in the oncology sector that is picking up. So we also launched finally we launched our biologics in this area in the first quarter. Hopefully Serpidio, which is for lung cancer, we will see the traction in this second semester, although it is a novel biologic, so it requires education for the oncologists, that's especially for the lung cancer, to start using Serpidio. That's the brand for our new biologics. And we see also in existing products, our portfolio, the in the medical device company, we see that the patients are getting back to the hospitals for hemodialysis treatment. Yeah, because during the pandemic, they are very scared to get treatment, unfortunately, to go to the hospitals. So we see this semester, this for first half, our hemodialysis company is our treatment is doing very well, double digit growth. And of course, in the OTC sectors is for Proma, which is our product for anti-ulcerant. It's doing very well, not just because of the festive season, Lebaran season, but also it seems that more and more people, the incidence of ulcer or the incidence for gastritis is increasing, probably because of the stress. We haven't seen this in the previous years, but right now it is increasing almost to high single digit. Yeah, that's unprecedented for the past 10 years, but that is the situation. And for again, post-pandemic, maybe people are traveling more. Our hydro cocoa, which is the beverage, is also doing very well, growing at a double digit. So we are trying to capture the opportunities to prepare ourselves for the next few years. Yeah. Besides the government effort also, that is very welcome. You know, we've been waiting for this situation, the momentum for the government to spend more on healthcare, and that's what I think I see Pak Budi is doing. Hopefully, he will continue as the minister for health. Although, yeah, we don't know what's going to happen. I hope he will at least the policy will continue for more independence towards healthcare products. That includes the TKDN, yeah, the local content. That's good. That's good for our industry. Yeah. And other strategic partners also that we are doing, in short, is that we, again, in response to what Pak Budi or the MOH is proposing, that we can also provide our raw material, active pharmaceutical ingredients, API. So we established a joint venture with a Chinese company, and hopefully that will help us to, in the future, to be more. Of course, this is selected APIs, not all APIs. We have done that for the biologics, starting 2016. But this is for the chemical, not just biologics, but this is for selected chemical entity that is still not a commodity, because if for commodity, for example, paracetamol or cholesterol lowering drug, that is already dominated by the Chinese. It will be difficult for us to compete against them. So we will select APIs that are still have value, that can be exported, that have values. Okay, so that's our joint venture with the Chinese, our Chinese partner. And then during the first semester, also, we completed the JV with our, with Alliance Pharma, our new partner in Thailand. That's the purpose is for paving the way for our biologics, Serpidio, which has the PD1, which I mentioned earlier, which has received a approval in Thailand. So we are getting ready for that. Yeah, and also not just Thailand, and also other ASEAN countries. I think the other projects, we mentioned this before, we continue to invest in a specialty product line like the oncology. So that's where the radiopharmaceuticals facility will come in. It's been under construction, and yesterday I saw the building already there in Pulau Mas. So hopefully by the end of this year, we can inaugurate it and then launch the products for oncology. Yeah. And also for other local, not others, but for the medical device line of business, the local content requirement is underway. You will see that there is, I saw the product there, dialyzer. Dialyzer is needed for hemodialysis. So as I mentioned, we have been in that business for some time, and it's growing very, very fast. Unfortunately, that means more and more people are suffering from chronic kidney disease, CKD. Yeah. So yeah, hopefully we don't have to, everybody here, hopefully you don't have to undergo that kind of treatment. It's not good. It's not good. Okay, so dialyzer is one of the, it's probably that's the first one here in Indonesia that we can manufacture that. Again, that's for the local content, and that will reduce our dependence on the imports for dialyzer. Yeah, and there are many other instruments like X-rays, CT scans. Hopefully we can start assembling here in Indonesia and not having to import. I think that is where Kemenkes is also aiming. So we'll try to do it step by step, and hopefully that will give us a foundation for further technology transfer from outside to Indonesia to make those hospital instruments. Yeah. So hopefully with that in place, for the next few years, KLB will be in a solid foundation so that we can take this opportunity to drive more growth and to improve the health for the nation, so that we can all be healthier and be less dependent to imports. Yeah, I guess there after this pandemic, post-pandemic, this new normal, we just have to be more selected in terms of the product portfolio, in terms of the regions where there are pockets of growth. Yeah, because I guess that's the situation right now, macroeconomic. It's even in Indonesia there, it's not the same. So we just have to be more focused, more targeted to where we want to get market share. We want to be dominating. Okay, that's from my side. We can continue on before before the Q&A so that we can have some interaction. So next.
Yeah, thank you, Ira. So good morning, everyone. Good to see you again. Thank you for making the time to see us this morning. Okay, just to continue from Ibu Ira's direction, we'll go division by division after this. So starting from the pharma division, first one. Yeah, so for the pharma division here, sorry, maybe I'll just stand here. As you can see, our top line growth by 7.6% for the first half this year. And then as you can see, pharma now contributes 27.7% to our total revenue. And in terms of margin, as mentioned, we have been seeing continuous margin recovery. And for pharma, we are now at the gross profit margin level of 52.4%. If we compare to first half last year, there is still some impact of product mix. Yeah, but if we compare to the first Q, you can see that the number is quite stable. So all this, despite the rupiah pressure, the product mix, the margin has improved on the pharma side. Well, KLB, we are the largest in Indonesia. On the left-hand side, you can see that our market share, we are now at 13%, the largest player in Indonesian market. And our product portfolio consists of three main. Is the branded generics, which is 46%. And then we have unbranded generics, 27%. And the last one is licensed product, 27%. So if you look at this, these divisions, unbranded generics continue to show a strong growth, yeah, in the first half, growing by double digit. Our specialty category, which consists of oncology and biologic product, also continues to grow double digit. Okay, next. Yeah, as you know, on the pharma, we have recent initiative, yeah, to explore into biologic product. Not exactly a new venture from KLB, but this is something that we are committed to do. And last year, we have obtained the approvals for two novel products, which is FSA for the kidney failure, as well as Serpidio for lung cancer. So we started this with a factory dedicated for biologic product, probably back in 2016. And we continue with the journey, starting with some biosimilar products. Yes, you can see now we have 6 products on the biosimilar side, yeah, all produced locally in our facility. So this is really in line with the government's initiative to push for local content. So you can see that KLB, we have pioneered on the biologic side. And on the novel side, again, last year we obtained 2 approvals for our products, which is Serpidio or Serplulimab for lung cancer, as well as FSA for kidney failure. So now we are working on the commercialization of these 2 new products and also working on the approval in some surrounding countries in the region, whereby we have also obtained the territories. The last one is about the oncology. As you know, oncology is a very important focus for KLB. And with the new Minister of Health, as Ibu Ira has outlined, he has been very transformative and pushing a lot of reforms on the healthcare side. Now we are talking about early detection of cancer. Yeah, so moving into preventive on how to ease the burden on the BPJS. Yeah, being oncology is one of the highest disease under BPJS. So now we are talking about early detection. And for KLB, we are now investing in a facility for cyclotron. This is to be used in PET scan machines in the hospital. So now I think we have to work together with the government, with the private side, yeah, how we can grow this market. On the hospital side, they also have to invest on the PET scan machines. Okay, maybe on the biologics, I would pause here and ask if Pak Johan has any comments to add here.
Okay, good morning. Maybe I just want to add some update on the biologic business. So as you all know that last year we started to get the approval for our biosimilar rituximab, bevacizumab. Yeah. So early first half of this year, we have several very interesting news. Number one is we get approval for our novel biologic FSA and Serpidio. Both are already commercialized. I think FSA back in March this year, and Serpidio starting April this year. And the latest development is beside Indonesia, for Serpidio, we also already get the approval in Thailand. Yeah, and we expect to, we already submit the registration all over Southeast Asia countries. So later this year, we will expect approval also in other Southeast Asia countries such as Philippines. For FSA, beside Indonesia, we also already submitted for BLA approval in South Korea. And as we speak now, our facility is being audited and inspected by Korean FDA this week. And if we pass this, we can expect to get the product also approved in Korea later. Just last week, we also get the green light from the our consultant for TGA, Australian FDA authority, to go ahead with the submission for our FSI in Australia. So this is all. Besides that, we also do the submission also for approval across Southeast Asia country. So moving forward, second half of this year and also next year, we expect to see more approval for these two novel biologic across Southeast Asia and also several other countries. And for the commercialization itself for FSA, earlier this year, we also signed a license out agreement with South Africa for commercialization in South Africa. And we are also under discussion with several companies across East Asia and also Middle East. So hopefully we can have a good news on the second half of this year for you all. So I think that is the update, Ibu.
Okay, thank you, Pak Johan. Okay, so let's continue with the second division, the consumer health. Next slide, please. Yeah, for the consumer health, again, we are continuing to see gradual recovery. Yeah, up to the first half, we grow by 1.3%. And in terms of contribution, now our consumer health contributes 14.2% to the total revenue. Margin-wise, you can see the improvement here. Now we are making a gross margin of 61.8%, which is an improvement from last year at 61%. And if you compare to the first Q this year, of course, you will see some decrease. This is mainly because of the product mix. If you recall, we have the fasting season back in the first Q, which is typically this is where Proma, our top selling product, one of the highest margin also in our portfolio, performed very well during this fasting month. So there's some impact of product mix there. In terms of market share, we continue to lead the OTC market with 10% market share overall. Product split in the middle, you can see that OTC still contributes 72%. And health supplement is 28%. Included there is the energy drink product, which is happy to say that especially in the export market in Malaysia, Extra Joss is doing very well there. So we have been tweaking the communication, the targeted segmentation, and it's proving to be working. So we'll continue with this and see how we can also expand the market in Indonesia for energy drink. On the side or consumer health, so far as you can see in the product portfolio, we are very strong in the OTC with 72%. But we understand that going forward, we need to expand this market, especially into preventive and wellness products. We have some products on the vitamin side, on the sports gel product. So I think this is the area, this is the direction we are going for the consumer health product. So you will see us launching more and more products into the preventive areas this year and also next year. On the left-hand side, you can see our market share. We are very dominant in some of the leading therapeutical classes in the OTC. Next. Yeah, the next division is the nutritionals. Nutritional division this year is particularly facing a challenging situation with the powdered milk market probably in the negative growth range. Yeah, with I think a lot of trading down happening, especially to affordable products. I think this is something that we as a company, we need to strategize how we want to manage this business going forward by tapping into the new areas of growth within the dairy market and also nutritional in general. So top line growth in the first half is 0.5%. In terms of contribution is about a quarter to our total sales at 25%. Margin wise, we continue to see improvement. Now gross profit margin is at 51.4%, improving from last year at around 50%, and is quite stable from the first Q at 51%. So this is basically just the result of a better raw material pricing, yeah, on the dairy side. And ASP increase, this is something that we do continuously. Every year we do a selective price increase in the range of 3 to 5%. Our market share, happy to say that we continue to gradually increase our market share. If we look back maybe more than 5 years ago, we are probably at around 10%. Now gradually we are going into the range of 15%. The market continues to be very competitive. We see the same names in the market. We have Danone, which is very aggressive in Indonesia. They continues to be, implementing a lot of strategies in this challenging market. We have Nestle. Nestle also is an interesting situation. We see that Nestle is now moving into liquid. Yeah, I think on the powdered side, they are reducing their presence and strengthening into the liquid products for Nestle. The rest of the names there you see are also the multinationals. Recently, we are also seeing changes in the competitive dynamics. We see some new names coming into the low end, mostly the very, very affordable products. Okay, next. Yeah, this is some idea about the portfolio on the nutritional side. You can see how Kalbe, we have a strong portfolio, a very wide portfolio from all, basically stages of life, from expecting mothers, children, up to adults and clinical nutritionals. You can see here that the powdered milk market is actually a minus growth, 1.4%. And we're still managing to grow at 0.5% for the overall business in the nutritionals. So I guess going forward, we will maybe look into more areas of growth, such as the liquid products. We now have some products on the nutritional side in liquid format, such as Entrasolcan, the one that we just launched a few months ago, and so far so good, gaining very good traction in the modern trade. And also our other product is the Hydro Cocoa. Yeah, this is doing very well this year, in line with the rising sports trend. So we are leveraging into this trend and also, introducing this product more into the sports communities. So far so good for those products. I think the challenge is more on the powdered side, and we have to find a new strategies how we can grow in this dairy business by tapping more into the liquid format. Okay, next. Yeah, the last one is the distribution division. Overall, our distribution division is actually the highest growth within our portfolio. So this is basically the third-party principals performance that you see here. Top line growth is 17.1% in the first half. We had some new principals impact, joining Ensafal's network late last year. So we can still see the impact of these new principals recording strong growth in the first half this year. In terms of contribution, it's actually now 32%. This is, there's some correction there. It should be 32% under the new restated numbers, with the end-to-end numbers, and now the distribution division, we're just really showing the third-party principals sales. In terms of margin, as you know, is quite stable at 10%. This is just distribution fee. And then, on the business side, we have other businesses as well in the distribution. So for Kalbe Group, on the distribution side is 63%. And then we cater for third-party principals with 24% contribution. We also have medical devices business, which contributes 5% to the distribution company, and then raw materials trading of about 8% contribution. Next. Okay, on the distribution side, we are also looking for ways to grow our business. The last one is the strategic partnership with Kiat Ananda Group, how we can expand into the cold chain FMCG distribution. So this is on progress, and we'll continue to update you on the progress. And then in terms of distribution network, we are the largest for the pharmaceutical network in Indonesia, reaching to 71 branches, and we are also served by 3 regional distribution centers in Indonesia, whereby by coverage, we can cover more than 200,000 outlets. These are just some of the names of the third-party principals, as you can see here on the pharma, consumer, medical device, and also raw materials. Next. Yeah, under the distribution, as you know, we have the medical device business, and this is one of the area that we are quite excited. We have a lot of projects on the medical device side, how we can also tap into the local content requirement. Yeah, this is, I think, an advantage for KLB, being the largest pharma player. We have such strong network in the hospitals. So I think this is just a logical expansion of our business. As you can see, our business on the medical device side, we start as import and we do the marketing for these principles. But now with this government's push towards local content, we are moving into local manufacturing. Of course, this is not an overnight process. So we will continue with this strategy starting from assembly. That we have identified a few areas on the medical device side. First is the consumables. As you can see for the consumables, we have a new factory for a surgical suture, which is now in operation. And then on the diagnostic side, we have been able to produce the first TB kits for tuberculosis identification or diagnosis. It has also been commercialized, and we are also working on the culture media. So this is on the consumable side. But we are very interested also to expand the business on the medical equipment. So now, as you see here, we are working on the dialyzer, one of the first project, and then mobile X-ray. This is also ongoing. And you can see there we have a few products that we are now in discussion with potential principals on how we can start local manufacturing of these products. Maybe I'll pause here to see if Pak Johan has any comments on the medical device.
Yeah, I think for medical device, basically we see this area as also source of growth for KLB moving forward. That's why we would like to move very fast in to be able to do the local manufacturing for medical equipment. Yeah, as mentioned, we already started with the mobile X-ray. Now we are working for ultrasonography, endoscopy, and also a CT scan, working with our partner, Transfer Technology, to at least assemble this equipment in Indonesia to get a certain level of local content. On the diagnostic side, I think besides preparing the kit, we are also using our capability for our biologic to manufacture the enzyme locally. Because for this, our focus for diagnostic moving forward will be molecular diagnostic. And for this molecular diagnostic, usually you will need this tag polymerase enzyme, which is the most expensive component of the kit itself. And now we have the capability to manufacture this enzyme using our bioreactor capability to manufacture it. So this is also will enable us moving forward to develop many others molecular testing, especially for microorganism identification and also virus. Yeah. So the other field that will use this enzyme is for genomic testing. Yeah. So that is the area we are going to focus on for our diagnostic business.
Thank you, Pak Johan. Okay, now we can move on to the last section, which is the financials. Next, please. Yeah, overall, you can see that for the first half, we grew by 7.6%. And then division by division, you can see that the fastest growth is coming from the distribution business with 17% growth. And then the next is pharma. Pharma is growing by 7.6%, whereas consumer health and nutritionals more in the range of around 1 to 1.3% for consumer, and nutritionals is 0.5%. Next. On the margin side, you can see at the gross profit level, we are now at 39.6%. If you compare to the first half last year, it's a 1% down from the gross profit last year. But we are happy to see that the recovery of the margin is sustainable. If you can see, the quarter by quarter traction is still quite stable. And then on the operating expenses, as you can see, we have been implementing efficiency. Our total OPEX now stands at 25.5%, with marketing being the largest part of our OPEX at 19.7%. And then we have the G&A and R&D spending. If you look at the breakdown of these expenses, our marketing spending and also G&A have been quite stable, but you will note the increase on the R&D side, which is basically the impact of the commercialization of the new product on the biologic side. So we have to start amortizing the milestones. Going forward, I think we will continue with how we can improve the effectiveness of our spending, especially on the marketing side. So probably you will see us spending more, yeah, in the second half. But of course, I think the most important part for us is our net income is now standing at 11.1% ratio, which is an improvement of 1% compared to last year. At the EBIT level, if you see our P&L, and now the ratio is at 13% and also growing a double digit. Sorry, the ratio is now 14%, growing by 13% compared to last year in terms of EBIT. The other income, other expense this year is favorable. As you know, rupiah is weakening if we compare to the end of year 2023. But with this US dollar cash balance that we have in our book, it's always a positive for us whenever rupiah is weakening. But outside of that, on the financial side, we have an increase in interest income in line with the higher cash balance and a lower interest expense in line with the lower outstanding debt to the banks. Okay, next. Yeah, on the working capital side, you can also see the continuous improvement from the peak back in December 2022, where our inventory level was very high. Deliberately, we increased the inventory level in 2022 in response to the global supply chain disruption. So now we are on progress to normalize this level from 147 days. Now we continue to decrease that to 116 days as of June. So I think our long-term target is in the range of 105 to 110 days in terms of inventory level, but we will continue to prioritize the product availability. And also we are monitoring the global supply chain dynamics. So if the pricing is favorable, we'll also increase the inventory to secure the raw materials. I think on the AR and AP side, there is no issues. Okay, we can move on to the next slide, which is on the balance sheet. Yeah, debt has always been manageable for KLB. As you can see in the first half, the gearing ratio is 3.6%. Our loan is about 848 billion. It's probably split 50-50 between long-term and also short-term for working capital. Cash level is very healthy at 3.7 trillion rupiah. Our net cash balance is 2.8 trillion. EBITDA, as you can see here, again, the ratio is also improving. Our EBITDA now is 2.6 trillion for the first half, with an EBITDA ratio of 16.2%. CapEx for the first half, we spent about 400 billion on the tangible assets. Some of this include the spending on the cyclotron and also some additional capacity for oncology, which we just completed, and some maintenance CapEx. On the intangible side is mostly the milestones for the biologic products. And then dividend payment, as you probably have monitored, we have distributed dividend of 52% from last year's net income. Next. Yeah, basically the financial strategies for 2024, we focus on improving our financial results after 2023, which is a very challenging result for KLB. So first, of course, is top line growth is the most important for us. So we will continue to find pockets of growth, yeah, areas of potential businesses to support the top line growth. As you know, on the pharma side, we continue to invest into the generic product, while at the same time, we build our portfolio on the biologics. On the nutritionals, we will also explore more on the affordable products, which is now the growing segment of the dairy market, and also the liquid products. On the margin side, I think margin recovery is also very important for us. So we will continue to drive efficiency be it in the COGS, in the production process, in the operating expenses by driving the marketing effectiveness. We are also discussing a lot internally on how we should be shifting our marketing activities from conventional to more relevant, or up-to-date marketing activities such as CRM or digital marketing. And then in terms of Forex, which is always a risk for Kalbe, being an importer of raw materials, this is how we manage our Forex risk by keeping a cash reserve of US dollar and some other foreign currencies in our balance sheet. And then, of course, working capital is very important for us. So we'll continue with the managing the gradual reduction of our inventory days. Okay, and then the last one is our outlook. Next slide. Yeah, for our outlook, we are still keeping the outlook for 2024, which is a top line growth of 6 to 7%. And then at the earnings level is an EPS growth of 13 to 15%. Whereas dividend payout, as you see, we are keeping the dividend policy at 45 to 55%. Okay, I think that concludes our update for the first half. We'll be happy to take your questions from here. So back to you, Sharon. Thank you.
Okay, thank you. So we have around 35 minutes for the Q&A session. I'll open for the on-site audience first, and it's a first come, first served basis. Yeah, please. Please take the microphone.
Hi, good afternoon, Kalbe management team. My name is Lakshmi from Citigroup. My question is, I think in the past 10 years, a lot of the capex or investments have risen, and your ROE generally has declined in the past 10 years. And if we assess, it's naturally because of the increase in unbranded generic and distribution, because those two are generally lower ROE. So you also mentioned about in the future participating in API and local content investments. So my questions is first, what's your outlook on ROE and investment returns in general? And number two is, what's the economics of this API and local content and working together with the government? Because definitely it's good for the Indonesian consumer, but for Kalbe's standpoint, how does it look like? Okay. And then maybe if I can add another question on dairy, what is your plan in liquid dairy? I think I saw like hydro cocoa, coconut milk. I'm not sure whether it's in domestic market or not, whether you will go into UHT or you will remain in a niche market in dairy. That's all my questions. Thank you.
Okay, maybe I'll start first with the ROE and I'll see if there's any further comments from the board. Yeah, in terms of ROE, as you know, Lakshmi, if we look at Kalbe for the last 10 years, we have been challenged a lot, on the margin side, especially at the gross profit level, because of the product mix, how distribution business, for example, which is a lower margin business, is growing faster. And then if we look division by division, on the pharma side, growth is driven by unbranded generics, which is, of course, is a market dynamic, something that we have to take advantage of. Nutritionals, as you know, is now driven by affordable products. So I guess for us, what is important is to focus on the growth, rather than probably preserving a certain ratio of margins. First and foremost is the top line growth. And then, of course, along the way, we'll try to improve our effectiveness and efficiency in the production as well as in the operating expenses. So in terms of ROE, I think we would like to maintain in the level of, say, 14 to 15%. If you look at our strategy, for example, on the pharma side, investment into the biologics is certainly a higher margin area, which is hopefully after the business is sizable enough, we can see some positive impact. I think in terms of pharma margin, we are seeing growing contribution from the specialty, which is now around 10%, 10% to low double digit. So this is a good traction for us, and we'll continue with the commitment to invest in the biologics. Okay, and then next question is about the API, API joint venture. Yeah, on the API side, as you know, Indonesia as a country, we are dependent on imported raw materials, and the Indonesian government has been pushing on how we can strengthen the health resiliency, including the API. We don't have the competence yet, yeah, as a country. As you know, Kimia Pharma started a while ago with their API projects, but still quite limited, yeah, in terms of a number of raw materials. So the strategic partnership, I think, is a milestone, is an important milestone for Kalbe to start going into the API production. So here we are partnering with a Chinese company. It's one of the largest players in China for APIs. So we start with a few molecules, but down the line, we can explore further for other molecules to be produced in this factory. And then the last one is about the dairy. Yeah, on the dairy side, as you know, the market is now driven by liquid product, whereas the powders is probably being challenged, yeah, by trading down issue and so on. So for Kalbe, we see this as something that we can explore. We have a strong range of product, strong portfolio on the nutritionals. So this is more about introducing the liquid format of the existing products, and we can even also explore a completely new product on the liquid side. Okay, I think I'll pause here to see if there is any further comment from the board on the probably APIs.
Yes, just to add, I think on the API side, API side, it's something new for us, and it's quite an eye opener when we discuss with our partner about their margins. So yeah, we would like to learn from them. That's why it's not something that is a commodity. It's looking for specialty products. I think that's key, and yeah, we would like to learn also from our partner how to get a good return on equity. So that's an eye opener for us. And for the dairy side, yes, we have tried also in the past years in the UHT, and we also learn about it, and hopefully with the Entrasol can over there that we see that is not the same, yeah, as the UHT, but yeah, it provides us, it give us a more optimistic that this liquid is also going well. It's probably cannot compare it to the powder, but it's a positive trend, and we would like to again, we have entered this market before, and we will see how it is, but it's still, well, we are mindful of the margin of the ROE that you are referring to. Yeah. I think that's it.
Okay, thanks, Ami. We have also the questions from Salvi HSBC from the Zoom. Salvi, you can unmute yourself.
Sure. Thank you very much. Good morning, management. Thank you for the opportunity to ask question. I have two questions. The first one with regards to biosimilar. I think the last in the last analyst briefing, I think you guys mentioned that we are actually looking to replenish our biosimilar portfolio, given that that there has been a slowdown in the last maybe 18 months or so in new molecule acquisition. I wanted to get an update on whether you have actually signed on with additional partners on new molecules, whether there will be any that we should actually look forward to that's pending for the rest of the year, for the rest of 2024, as well as going into 2025. So that's my first question. My second question is with regards to the new regulation on infant milk formula, particularly around prohibition of advertising. So my question is, how do you plan to proceed? Because it does look like it should strengthen, I think, the incumbents' sort of branding, given that new brand building may be a little bit more difficult. But how would you sort of try to cope with this? So any sort of color would be helpful. Thank you very much.
Yeah, I think for the biosimilar, yes, beside the existing one that we already have, rituximab, bevacizumab, trastuzumab, nimotuzumab, all now starting to get approval across Southeast Asia. Now we are very much focused on the commercialization of this product within the region. But for the new molecule, for the new one, the new asset for biosimilar, we are also working on it now. There are several molecules that we are really interested in. For example, GLP-1, right? That is our priority. So we will make sure that we will launch this molecule GLP-1 within the region when the patent gets expired in 2026, 2027. That is one very important molecule currently we are focusing at. Yeah, besides that, we have several molecules like pertuzumab, denosumab, those kind of molecules we are also working on now. Yeah. As we put a lot of focus on biosimilar to beef up our portfolio moving forward, because we see that this biosimilar will give us a more short-term result, while we are still working on several novel molecules that are currently in phase 2. Is that answer?
Yes, that's very helpful. Thank you very much.
Thank you.
Yeah, Selfie. On the nutritional side, yeah, you mentioned about the new regulation on the infant formula. Actually, this is not exactly a new regulation in the sense that it has always been prohibited, yeah, for 0 to 1 year old to advertise infant formula products. It's now that the government is strengthening this regulation. Basically, advertising and discounts are not allowed for infant formula up to 3 years. So I guess for Kalbe, we are a strong company on the dairy side with strong pharma background. So we have a good network on the healthcare professionals. Yeah, so this is one of the strategy or the initiative that we can explore on how we can strengthen our presence in the infant formula while, of course, complying to this regulation. And you are correct in the sense that this will serve as a barrier to entry to this infant formula market, making it more regulated, yeah, for new players to enter this space. Yeah.
Got it. Thank you.
Okay, before we go to the other online questions, do we have any questions? Okay, Vanessa. Sorry, thank you, Ingrid.
Thank you for the opportunity to ask questions. My name is Ingrid from Mandiri Sekuritas. So I have several questions. I think the first question is more regarding to the licensed product. So I saw that the second quarter licensed product has been very strong. Just want to know what's the driver behind that? Is it new product or existing products? Is it biosimilars or maybe biologics, maybe not, but other things. And then the second question is regarding the consumer health and nutrition. So could you elaborate more on the local sales versus export sales breakdown between the two? Because as I recall in the first quarter, I think the main drag is actually not coming from the local, but actually coming from the Myanmar export. So just want to know the update on that. And I think my last question is more regarding the margin. So I see that you don't change the margin guidance for the full year of this year. So what's your expectation for the second half margin? What are the risks there, upside and downside risks? Thank you.
Okay, thank you for Ingrid for the question. Yes, it's true that the licensed product, we have so many collaboration and partnership with launching the new product, and quite successful for some of the product. We are deal with the AstraZeneca Indonesia for Nexium product. That is also give us the contribution in terms of the revenue, and as well as that we also launch some of the product that combination for the anti-cholesterol product. This is also shown a good response from the market. Instead of using separate, that we have the combination. This is also give us good performance on the contribution of our branded generic product. And of course, there's some product from the bio product as well. This is also in terms of the revenue, is also give us a big contribution on that numbers.
Okay, so for the next question is about the export, yeah, Ingrid. On the consumer side, our export market is probably just growing around 1%. Yeah, so this is a different story country by country. In Myanmar, as you mentioned, the challenge with the import restriction still persists. So we continue with our strategy to move into local manufacturing. It's a good thing that we have a factory in Myanmar. So now it's more about moving the products to that factory, going through the registration process and so on. Other country like Malaysia, as we discussed, is doing very well on the energy drink side. Yeah, so it's quite, I would say it's quite balanced for the consumer side. For the nutritional, export is facing a challenging period, especially from Philippines. We see weakening demand on some nutritional products in the Philippines. In the Philippines, we are very strong in the diabetic product. So, but we think in the long run, I think the story is still positive for health-related products, and we'll continue with our marketing activities and also improving the operation in Philippines to improve the performance of the export market coming from Philippines. The last question is about the margin outlook, yeah? Okay, for the margins, as you can see up to the first half, we are on track in terms of the gross profit margin. So despite the rupiah pressure, despite the product mix pressure, we're still able to achieve the targeted gross profit margin of 1% improvement compared to 2023. So we are now at 39.6, yeah, 39.6. And I think for the full year, looking at the current situation, we, in my personal view, yeah, rupiah should be in a better position with what's happening in the global market, yeah. The changes in the US, I would say this is pointing to a more favorable rupiah. So for the full year, we are keeping our guidance. And of course, I think in terms of risk, is mostly coming from product mix, yeah, especially with distribution business growing faster. But all in all, we're still confident that we can achieve the full year outlook for margin or earnings improvement by 13 to 15% growth at the bottom line.
Will there be some shift to second?
Yeah. For the OPEX, first half is indeed quite low, yeah, but for the second half, you will see some more investment on the marketing side, but of course not in a significant way. So we're still monitoring the overall spending and try to increase the effectiveness of the spending. Like I mentioned, internally we discuss how we can be more effective on the marketing side, how we can look into new ways of doing marketing, digital, yeah, influencers, using the CRM, which is something quite unique for KLB as a consumer company. I think we are one of the first companies to have our own team on the CRM side. So there are a lot of things that we can leverage on the marketing side. Yeah. Okay, thank you, Ingrid.
Okay, now we have questions from Mada. Maybe you can unmute yourself, please. From online.
Thank you. Thank you very much. And apologies that I couldn't make it this time to Jakarta. We'll try to see you guys in Jakarta in the first possible opportunity. But I'm interested in this new initiative with the Chinese company, Lifsun Pharmaceutical, right? My understanding is that developing active pharmaceutical ingredients in Indonesia is generally an uncompetitive initiative any way. It's like trying to grow wheat in Indonesia or trying to produce fresh milk or animal farms, right? Because the ecosystem in China, the scale is immense. Even India has a problem with basically matching the API industry of China. So Kalbe is doing this as partly, I know the hedging side of things in terms of COVID and so forth, but is it really more because of government initiatives and government push for greater API production domestically? And you did mention, Ibu Ira, that your Kalbe is learning how to generate decent ROE in APIs, but APIs upstream generally is a lower ROE business than downstream, which you're in. So this is, technically from a capital allocation standpoint, will lead to a lower return on equity overall. So how are you thinking about this? That's the first question. Secondly, I'm curious about a little bit about government policy and Kalbe's perspective on it. Pak Jokowi was complaining that pharmaceutical prices in Indonesia is 3 to 5 times more expensive than Malaysia. From your perspective, why is that? Why is pharmaceutical prices more expensive in Indonesia than Malaysia? And Pak Budi Sadikin has been tasked together with Bu Sri Mulyani to investigate measures to lower drug prices. Is price control even a risk in the drug prices, sort of for the drug or for the pharmaceutical industry? Do you anticipate policy changes if Pak Budi Sadikin, leaves the ministry as anticipated or as rumored? He might be the leading candidate for the new Minister of Finance. So, a couple of questions. Sorry for the length.
Okay, thank you, Parmada, for the question. It's interesting talking about the API, active pharmaceutical ingredient. Yes, as Pak Bu Ira and Kartika has also mentioned, we are learning how to enter this API business. As you know, all the government encouraged, 90% of the raw material is imported from India and China, of course. And we are trying to learn how to enter to this business for the active pharmaceutical ingredient. We are looking, we got the partner, it's a joint care group, Lifzone is one of the leading and also experience in the raw material business. Yes, it's true. The product that we are produced, not like the common product or commodity product, like you all knows that like Kimia Pharma is already have for the paracetamol or some other commodities product like anti-cholesterol product, anti-hypertension. No, we can say that we are entering the high-end product and sterile product. Means that not for the oral, but injectable product. This is not only for the local market, this is also mostly is for the export market. So we can say that, yeah, in terms of economy of scale, if you compare with China or India, of course, Indonesia far behind. But this is just want to transfer the technology or move from the China facility to Indonesia facility. So this is part of the strategy that we want to enter, part of the resiliency from the governments to enter this API business. But this is also another strategy for Kalbe also to learn the API business. And also this is not for the local, but this is for the export market in the future. Yeah. And
maybe
okay.
Yeah, just a little bit more information about this API. I think lately, there's a lot of interest from this Chinese company to relocate their facilities outside China because of the geopolitical reason, especially product that they used to export it to Europe or to US. Yeah, they are afraid that in the future, they might have a problem from exporting in from China. And this is one reason also why they want to relocate. And we think in Kalbe that this is also in line with the Indonesian government policy, who want to have this raw material manufactured locally in Indonesia. So I think this is a win-win a solution for both the Chinese company and also us in Indonesia, Kalbe. And from the scale, it is also makes sense because the product is not intended to use only in Indonesia, but also for the international market. Hopefully that answer your question.
Okay, so for the second question, actually talking about the price, that even that we all know that President also Pak Budi is also mentioned about our price is higher 5 times compared with the other country like Malaysia. Yeah, this mostly for the originator product. So as we all know, there's 3 steps of the product. Originator product mostly is for 25 years patented product. That is a multinational product. And of course, that price is a little bit higher compared with the other. Second, of course, the branded generic. We call it Me Too product. And the last one is the generic product. And when we talk to the government, and government also admit also for the generic, we already low. If you compare with the price of the others, I mean, compared to the other country, generic, definitely the price is already in the low level. And second, for branded generic, normally is we can launch the product after off patented for the branded for the patented product. So the president's mention or the price is higher, even that is for the patented product, originator, which is originator product. But for the branded generic and also generic, mostly the product is already in the with the competitive price already. Even that for the generic with the BPJS and e-catalog, that price is already in the bottom. And also if we compare with the other country, that product is already in the low range. I mean, in the low price already. So I think that's already answered the question, Permada.
And I think there's also a question: do you see, price controls being a potential risk that the government might implement? I mean, it's happened before.
Oh, for the price control, at this moment we are still don't have any signal for the price control. But mostly this business, it will be difficult to control the price. But maybe there's some incentive or some others regulation in terms of, as we know, all know, Pak Budi's mentioned about the import of the imported product. Imported product, there's a taxes coming to charge to the import product. Maybe that importation tax will be reviewed by the governments in order us to be more competitive compared with the other country. For the price control, I don't think so at this moment, but we are still waiting for the Pak Budi's action or some others. We are keep monitoring and discussing with the government also, questioning by them also for certain product. But again, the government has already mentioned the patented product that is can be compared apple to apple if the price like a multinational product. As I can mention here, maybe Crestor or Lipitor, it can compare with the other from the other country, apple to apple. That's his mentioned by the government.
Sure, the price control is the lobbying position of the Biopharmaceutical Association, right? Because they've said that actually there should be price controls. So you're not worried about that.
Yeah, I think if we look at the price they compare within Malaysia, if you look at the price of the medicine sell in Malaysia, I think we are still feel very comfortable with that level of price. Yeah, so I think that is not the issues.
Okay, and then just to follow up on the ROE, Livzon, basically their ROE is inferior to Kalbe. So, the endeavor I understand and appreciate you'll focus on the higher end and focus on export. Are you comfortable that the endeavor will not be return dilutive for Kalbe?
No, I don't think so, because if our project with them is only for specific category of their product. So Lipson, if you especially Joint K, if you look at their portfolio, they have a very wide portfolio of API. We are not doing all of that. We are doing only for very specific category of API that have a relatively much higher value.
Okay,
Yeah,
got it.
Just to add on that, hi Mada. Yeah, just to add on that, on the margin side. Yeah, in the past, we have been very cautious with API because of this lower margin issue. Yeah, but this initiative or strategic partnership with Lipson, as Pak Johan and Pak Mul has mentioned, is actually for non-commodity product. So it's very selective, and I can say that with this joint venture is actually one of the better margin segment within Kalbe's portfolio.
Yeah, if I can add on, they have various products from the commodities product up to the high-end product. For this product that we work with and partnership with them for the joint venture, this was a high-end product. For the high-tech product, not the commodities product as they know and they already have in China. This specific, we already talked to them for the high-end product, sterile product, not for the commodities like oral product. This is an injectable product. Yeah, and also for the high-end, which is that we already see the figure. This is for export and the margin is pretty good if you compare with the others like the commodities product that they already produced in China as well.
Got it. And lastly, any guidance on when the production will start? When will we start seeing these in your numbers?
Now we are still working on it. Hopefully, in the next 3 years that we can start commercialize this product. And of course, our target is for the export. If we can make it in local here, to commercialize in local as well. So it will be starting from the 2027.
For export, do you need BPOM approval?
For the API, of course, we have to work with the BPOM as well. But for the API itself, of course, that is not as complicated as the finished formulation product.
Okay, great. Thank you so much for answering and
thank you,
being patient with my questions. Thank you.
Thank you.
Okay, thank you, Mada. So we are also serving some lunch for you. So yeah, just enjoy until we can also continue with some questions. We have from Vanessa or RHB and also Puja from Morgan Stanley.
Hi, Kalbe's management. Thank you for the opportunity to have a meeting and congratulations for the results. So my first questions may be a follow-up regarding the API. If you don't mind to share what is the revenue contribution you target in 2027, as well as how about the margin, any color in terms of the range of the maybe GPM? And also just want to check regarding the API, do you already have the standby buyer or will you use internally? Also, will you sell it to the government? Just want to see the risk, whether any control from the pricing and so on regarding the API, as well as we know that Kimia Pharma already started back then to develop the API, but it seems that the progress is still nothing. What happened and why you doing this? What is your competitive advantage and how should we look at the competition or the movement from the other competitors regarding the API, especially from the private and MNC companies? That's my first questions on the API. The second thing regarding, if I'm not mistaken, you have the retail chain like Mitra Sana, as well as the hemodialysis clinics, but it seems that the progress also quite stagnant, if I can say, over the last few years. What is your strategies actually for the retail? Why not going for the full force as the integrated healthcare companies that having end-to-end business? And maybe the last one, just checking on the energy drink. The improvement in the energy drink in this year as well in the export market, is it permanent or should we expect just that having from the low base, and how should we see the growth over the next few years? I think that's all.
Okay, maybe I'll start first and then later if Pak Johan or Pak Mul has any comments. On the API side, yeah, again, the strategy here from this Chinese company is to relocate their production base. So of course, they already have the market for the export markets, yeah. So we don't have any concerns on that side. And in terms of contribution, I think API business is always quite sizable. Maybe after 5 years or so, the contribution should be quite sizable in the range of hundreds of billions. But we need to keep in mind, yeah, the ownership structure, how this joint venture, Kalbe is minority. Yeah, so what we'll be recording is just a portion of the profit instead of the top line. This is a minority stake deal. What is important here is the strategic move to move into API as a starting point, as a milestone to build our competence on the API. So this is more of a strategic initiative for Kalbe to integrate from end to end to API. Okay, next on the Mitra Sana retail strategy. Yeah, this is something that we are also monitoring and discussing internally. Right now, Mitra Sana serves as an online and offline platform, as a pharmacy and also as a clinic, yeah, for vaccinations. So there's a lot of activities, yeah, we can explore for Mitra Sana. So now we are in discussion to see the future business model of this business, yeah, for the retail. But if your question is about integrating end to end as a pharmacy chain, I don't think we are heading in that direction. So it has to serve a special purpose for Kalbe, yeah, as an offline platform. Okay. Yeah. Oh. Oh, okay. Yeah. Yeah. Hemodialysis is actually one of the best performing business the last few years, yeah. So we'll continue with this business. We have a special the hemodialysis that will continue to bring our products as an ecosystem for kidney failure. And also we have the products from the medical device, nutritionals, all of this we can combine into this ecosystem. So the work on. Yeah, the last one is about the energy drink. Energy drink, as we discussed, is doing quite well, especially in Malaysia. If we talk about whether this is structural or not, I guess it depends on how we position the product. Yeah, if we look at the US, European market, this product is still relevant. Yeah, you see Monster, you see Krating Daeng is still doing very well in these developed markets. So I think the key success factor in Malaysia is how we transform the positioning of this product from purely blue collar, yeah, targeted to the plantation workers. Now it's more general, yeah, in terms of user segmentation. It's now used as a refreshment, if you would. So I believe that this has a structural potential in Malaysia. And we are also exploring whether we can also replicate the success in the Indonesian market on how we can change the segmentation of this energy drink from purely blue-collar workers to make it younger, more relevant, yeah, targeted perhaps to college students and so on. So there is still some potential on the energy drink. But if we go back to the strategies of the consumer health business is to move into preventive and wellness. We believe that the long-term story, long-term positive growth is coming from that space.
Sorry. Thank you. If I may follow up regarding the API, thank you, by the way, for the answer. Any retaliation, maybe any movement from the other players to also tap into the API, and any color regarding the margin, maybe that you can share, and as well as why it seems that Kimia Pharma is not really moving the needle regarding the API.
Okay. Yeah. I think that is a very interesting question. Yeah, Kimia Pharma produced 6 API and they are going nowhere. with their API. But there are another company we need to look at that manufacture the API also locally, which is, for example, Daewoo. They are manufacturing erythropoietin. Yeah, but the method is they relocate their facility from Korea to Indonesia, and the product they manufactured here, the API, is not just for Indonesian market but also export, and they are quite successful. So I think the model that we are doing with the API deal are more similar to that, not like a Kimia Pharma that's rely on just Indonesian market. From the beginning, we already understand that if you manufacture API and with only Indonesian market, the scale will not be enough. Yeah, you will not get enough scale to compete. That's why, as mentioned, we choose a certain category that not only for Indonesian market, but also for export. The scale is there. And also the kind of API that not that many company can produce. So the competition is much lower. Yeah. And because of that, we still can enjoy a decent margin.
Any color regarding the numbers of the
Yeah, okay. At this stage, I think we can say that the margin will be higher compared to the consolidated Kalbe numbers at the gross profit level.
Oh, okay. Bu, sorry, if I may ask just one follow-up questions regarding you mentioned that the marketing will be higher in the second half. Bu. Any maybe guidance like the OPEX to revenue ratio as well as maybe my second questions, we know that the rupiah mostly depreciated in the second quarter. Is that already reflected in the second quarter result, or should we expect that that will be translated in the third quarter? Because if I saw your inventory days, it's about 3 months.
Yeah, for the marketing spending, I think until now, first half, probably our ratio is about 20%. Yeah. So going forward, we might see additional activities on the marketing side, but all in all, the ratio of total marketing spending should not differ too much, yeah, from the current level. So for overall OPEX, I think we'll stay in the range of 26, 27%. So we'll continue to monitor the effectiveness instead of this investment. And then the last question is about
the idea depreciation,
yeah.
that mostly happened in the second quarter. Is it already priced in the result, or we should expect that to reflect in the third quarter?
Yeah, I think rupiah has been weakening probably since the second quarter. Yeah, so some part of it has been reflected in the P&L, but we might see gradual additional pressure in the coming quarter. But all in all, I don't think foreign exchange should be a big concern, yeah, this year. If we look at our gross profit margin, we see some improvements coming from the raw materials already, including the forex impact. So if we look at our gross profit, there is some negative impact from the product mix, about 2.5%, and then we have some offsetting impact from the price increase, about 1%. And then the remaining about 0.5% is a positive impact coming from the lower raw material, including the forex impact. So all in all, it's still manageable. And we believe that towards the year end, we can still maintain the current level of profitability.
Okay, got it. Thank you so much. Best of luck.
Okay, it's very interesting discussion. So due to limited time, we only can have just one question from online audience. We have Pooja. I see your raising hand. Pooja, you can unmute yourself.
Good afternoon, everyone, and thank you for taking my question. I understand that time is limited, so I'll restrict my question to just one. Following up on the previous participant on the gross profit margin improvement of 100 bips expected for the full year. In the first half, the 100 bips decline that we have seen, it's mainly coming from the pharma segment, which is the product mix with unbranded generics growing faster. Do we expect most of the growth in the second half in terms of the margin improvement coming through from pharma? because there are two novel biosimilars which are up for commercialization. And what I understand is that there is a lot of education which is going to be required to be selling Zerpido and FSR, which may be a little more gradual. So just wanted to understand what will move the needle and how do we expect the pharma margins to be there in the second half.
Yeah, thanks, Pooja. If we look at our gross margin in the first half, on a consolidated basis, there is a product mix and business mix impact of 2.5% coming from the faster growth of the distribution business, which is a lower margin. Yeah. Other than that, on a division basis, pharma, we have a slight decline of margin because of the product mix with unbranded generics. Whereas nutritionals and consumer health continue to see gradual recovery. So the outlook for full year, I believe, will be quite stable, given that I think the biggest risk is the currency. We believe it's quite stable now, especially with the global dynamics. And then in terms of growth, I think we will continue to see the same rate of growth coming from all the divisions and all the businesses within the divisions. So if we continue at the current growth of double digit, for example, for the distribution business, pharma will continue to be strong, high single digit, and then we are keeping single digit growth for nutritionals and consumer. We have an outlook of maintaining the gross profit at 39.7% for the full year.
And if I may follow on that, nutrition and consumer, because first half has been very weak and the industry itself is not growing, although you're gaining market share. The second half, given that the powdered milk category is not something that you plan to pursue, do we still expect low single digits, or how should we look at consumer and nutrition segments?
Yeah, for consumer and nutritionals, looking at the current trajectory, we're targeting in the range of low to mid single digit growth. I think one of the factor here is the low base in 2023, especially for the consumer. So all in all, for the full year, I believe this is still quite reasonable for the consumer health. For the nutritionals, I think the strategy is to be more in tune with the market. We have to find new pockets of growth, especially within the affordable space. Yeah, we have also monitored the market, and we see what kind of product is still actually growing positively. Products in sachet, for example, is a good performer within the nutritional business. So we'll strategize around this changing dynamics to be able to achieve the targeted growth for the nutritional business going forward. And of course, products like hydro cocoa, for example, the coconut drinks, continue to grow very strongly. So we will strategize by focusing on these areas, on the liquid as well as on the affordable products. I hope that answers your question, Pooja.
Thank you, that's helpful.
Okay, thank you for Pooja for your questions. So this is the end of the session of the Q&A. I will give a chance for Ibu Ika atau Bu Kartika, Bu Ira to give some closing statements, if any.
Yep. Thank you very much for your interest to Kalbe. I hope we can move on from this first half until the end of the year with the outlook. And although there is a lot of volatility and globally and also in Indonesia, I think we're optimistic to be able to deliver a good second half result. Thank you. Thank you for coming.
Okay, thank you. All right, everyone, ladies and gentlemen, thank you for coming to Analyst Gathering for the first half of 2024 unaudited result. We are very thank you that you are always supporting to Kalbe Pharma. Thank you for attending us. And if you have any further questions, just contact to me, our team, or just email to investor.relations@kalbecorp.com. And after this event, you can also find our presentation materials that will be uploaded to the website at www.kalbe.co.id. So on behalf of management team, we also apologize for the inconvenience of our welcoming, and thank you. Hope to see you again.
Recording stopped.